All right, welcome to the Phantom Troupe Sushi Forum. This is day 5 of a week-long experience discussing with the community the Phantom Troupe strategic raise in detail, and having Q&As with strategic partners who are interested, with the community, with team members from Sushi. It's been a very active week of uh, community discussion, I should say. Today, we are going to be primarily just, as always, sort of recapping the past discussion up to this point, and then also having sort of a day just dedicated for the community to bring their thoughts forward on everything that's happened and the terms as they stand. Really just talk to each other.
Yeah, perfect. Yeah, I don't know, Omakase, do you want to just start off with kind of where we're at and kind of the sentiment behind things?
Definitely. I guess today's session will be, we can take a lot of questions. So definitely recommend people to ask any questions. If you have, um, any uncertainties, have any opinions, etc. I think generally, we throughout this week we revised the terms. Right, we've had AMAs regarding like what defining what strategic means and like what kind of profile fits kind of that definition the best. We've talked to different protocol innovations that have resulted from these discussions, which is quite frankly amazing. And we've also talked to some of the most engaged people, on the forum, on Twitter, etc. So that culminated yesterday with speaking to Amy from Lightspeed and also Jeff from Arca. So lots of developments this week, and generally the current I guess terms as it stands is there will be a 20 million raise, and then 10 million is allocated for institutions, 10 million is allocated for community. Um, there will be a warrant attached, and I guess I'm happy to go into the details between a warrant versus an option, right? Because originally in the terms it did specify an option, and the strike price for that warrant is to be determined. So some key things about this, right? There's no upfront discount, right? As the kind of terms have been revised by the community, right? This has been a really big ask. Sushi is a very liquid asset, so there's probably no reason to apply an upfront discount. And then additionally, equality of access is important for us, right? And we'll continue to make this a priority. And going forward, it's really about, I guess, if anybody has any questions or comments regarding the current terms as it stands. And then next week we're going to be heading more into, how do we execute, right? Like, and the parameters for the community raise, right? Because there's lots of questions around community raise, how that's going to function, etc. And then next week we can also talk. There's also been a lot of discussions regarding, legal implications, right? Should there, be a community raise, etc. How do we handle this? And what's kind of the general opinion, right? Legal opinion of a community raise, etc. And so as we head into execution, defining some of the more granular details in execution next week, these topics should be at the top of everyone's minds. And, welcome to hear any, opinions from the community on how we should structure this. So that's generally the overview. Highly recommend if anyone has any questions to raise your hand and, let's start a discussion.
Yeah, I'm just going to echo that. Please raise your hand if you've got any sort of thoughts or opinions or anything that you've been thinking about over this past week about this raise. Something I did want to ask, I have sort of noticed some people asking about this, is trying to see if the core team has any preferences at this point, like sort of teams or interested strategic partners that
Mhm.
the team has identified to be preferable?
So I would say right now is about kind of establishing the general terms, and then we can like follow up with interested parties. I think right now we're highly motivated by highly engaged partners, right? People who participate in governance, who are helping revise the structure, etc. Like making a bad idea go from a good idea, right? All that participation is definitely like bonus points and like people we want to work with, right? We don't want to work with people who kind of say, oh, like everything's all good, like take the back seat, like we're not interested in improving anything. So as we said, as we seen yesterday, right? Like Lightspeed and Arca are definitely two highly motivated and highly engaged entities that have been interacting throughout this whole process, right? Amy has been amazing. And, she was the first, she was basically one of the first institutions to even post in the forum, right? And say, here's what we think, strategic value is, and, a little bit about herself, etc. Jeff from Arca also came up with, revised terms saying, they came out pretty strong. They said, there should be no discount, right? Here's why. They gave a good proposal. And then eventually, all of these things, as Jeff and Amy said yesterday, governance is all about compromise and seeing like what's the best fit for all parties. And as we also discussed in a couple previous AMAs, right, it's all about incentive mechanism design, right? Like, assuming all parties are like self-interested, how do we get everyone to work together towards kind of a mutually beneficial goal? So that's been like a very key point, right, in all of this. So generally, we would say the most engaged, right? It's kind of obvious, right? Who's like highly engaged right now. If we go back to this term like strategic, and we kind of like review, the AMAs from yesterday and the day before on like where Sushi is and where we need to go, right? We've gone from 0 to 1. Now it's time for us to go from 1 to 100. And as our definitions of strategic, right, in the forum kind of point out, this does favor, where we kind of need to go does favor more, traditional institutions who have the experience in setting standards, right? They've gone through multiple, technological, technological cycles, right? They've seen new technologies come out completely disruptive, and they've, had the experience of setting the standards, right, for those technologies and like allowing them to grow and thrive. The same can be said for DeFi, right? DeFi is a very new, very innovative space. Arguably only 2 to 1 years old, right? And Sushi as an ecosystem has a lot of opportunities to set standards, right? So working with strategic partners who kind of like have this vision and more importantly have this experience is super important. And as I said, right, this does like this does this does like favor more traditional firms with lots and lots of experience. And I think as Amy and Jeff both shared yesterday, right? They probably have 100 years of corporate finance, product development, growing businesses, regulation, etc. between both Lightspeed and Arca. So we do think that this is highly value added, right? Because we do need partners who kind of know what they're talking about, right? In a certain sense, right? Because there will be lots of opportunities ahead to kind of take something that's unstructured in this decentralized finance space and make it a little bit more structured, apply standards to it, and allow Sushi to really thrive, right? And become like a standard across, right? Not only DeFi, but also like institutional partners, etc. And I will also say that like having institutional partners is key to kind of like establishing these network effects, because Sushi is really strong in kind of the DeFi space, and our network effects are a testament to that. So we need to find ways to kind of expand to institutional players, right? Because these are a different weight class, right, of people who are, investing in digital assets or, supporting the growth of, different entities, having, serious discussions regarding like regulations and how that all applies. So having like a few strategic partners who are from that space can give a lot of positive signal, right, to other institutional players, for them to, start to interact and engage, right, with Sushi, with our community, with our governance, etc. So that's really, I guess, the what we're looking out for, and what we hope to achieve, right, through our strategic partners.
Just kind of going on off the heels of that as well. I know that there's a ton of people that are concerned about VCs and, kind of the grassroots origin that it's coming. We've made it this far, quote unquote, without them. But I mean, that's kind of debatable, I guess, as we kind of, how essentially some of the people involved in this have taken it, have been allowed it to get this, allow Sushi to get where it is. But these people are going to be involved at some capacity. They have the interest to be involved. And I just think it might be better to have strategic partners, like as we're kind of suggesting, or it's an interesting, case to look at, because probably better than just having somebody that's in here to just pump and dump your token to try and, make a buck. Whereas if we have somebody that's interested in, curious into what's going on here and finding it attractive or very interesting, and especially as this whole strategic raise has really opened a lot of eyeballs, and this is quite a unique event to be a part of. So the other aspect too was sorry, I lost my train of thought here.
No problem.
Yeah, it was more around like the just like the how involved, for example, like Amy and Jeff have been. Obviously, that's just two partners and whatnot. But like even seeing something like Amy opening up her Calendly and saying, "Hey, come and contact us." Like I had a call with her last night. It was very approachable and all that. Now, people are concerned about where that can go and where these the wolves in the sheep kind of idea. But having these people involved and on our side, I think we need to think about where this is all headed in the future. If the future of France narrative that we're all looking forward to, it needed to start a certain way. It needed to start with the grassroots. I really like this approach, and I think so. Like the community loves it as well. And I think if it starts this way and then has more of the strategic partner afterwards versus a strategic partner first and then trying to, try and show off as some grassroots movement, it's not going to have the same effect. And this way here, as you can see, because we've gone from grassroots, we're now allowing kind of grassroots entry into this. That's kind of what's caught my attention and has made this interesting to me. And just kind of taking that approach to this and thinking from it that realm. I don't know if that makes sense to people or not, but just that approach and how we started grassroots and now we're moving this way because we know that this is coming. We know that major players are coming into this, and perhaps having some of those kind of people on our side ahead of time will be beneficial in the future. It may not look like it right now, or we may not understand it, but they're going to go somewhere. And I think maybe aligning with them could be a good way of looking at this.
Yeah, and definitely. And I guess to follow up what you said, right? I don't see these two types of actors as mutually exclusive, right? Like we're not saying like, hey, we're like only dependent on VCs now, right? Like this is right. The power of Sushi, right, has always been network effects, and so we need to continuously think as a community how we can continuously expand our network effects, right? As I keep on saying, right, we're a DeFi blue chip, but that doesn't really mean anything, right? If you take a step back and you look at everything, we want to kind of be like the capital markets blue chip. We want to be like a major, we kind of want to be a major entity, and how we do that is through like growing our community, right? But what we have now is a pretty unique opportunity to set the terms of like, okay, we're growing our community, we're we're engaging and onboarding, right, these new kind of institutional players, and what are the terms on, how we engage with them, right? How do we want them to engage with us? How do we keep all the incentives aligned? And I think this is what this whole like discussion in this week has been, right? I don't think it's mutually exclusive to, I definitely don't think it's mutually exclusive, right? Like these two networks are compatible, and they're necessary to help us like grow into a larger network, right? Because the more we grow, right, the more the protocol grows, and the more successful, everyone is, every participant is within this ecosystem. I did see some questions, but I'm really keen to keep this session today about um, like answering questions, because I know some of the other days there are lots of speakers, etc. And I want anybody, right? Like, if you feel this entire discussion or this entire process has been, inaccessible or, confusing, etc., like, get up on stage and, let's figure it out.
Hey guys, just had a
Hey.
couple questions, been following along last couple days. Really love all the discussion. Could you maybe talk a little bit about the sizing of this round? I've heard some numbers mentioned earlier. It was like 10 million for community, 10 million for the institutions. Does that, and I don't know if those numbers are exactly right, I'm probably wrong, but is that including the amount that we want to raise for the warrants as well? Maybe just talk about the sizing, how we decided on this.
Sure.
It seems like maybe the partnership aspect is more important. I understand that. I think that's a great idea as well.
Sure.
And that's pretty much it. Just thinking about the sizing and if we're going to have to raise again soon.
Sure.
Any thoughts?
So, I would say the sizing is kind of determined by some of our thoughts regarding like our internal run rate, right, and what we need to do in order to like grow and like keep up infrastructure, etc. So in the original proposal, I think 60 million was definitely too aggressive. So in this revised proposal, it's 20 million. And then with the warrants, right, it's a 1-to-1 warrant. And that'll be, so in total it'll be 40 million, but it's like 20 million, it'll in total it'll be like, a certain amount. But the warrants are kind of sold at like a much higher strike price. So the total raised amount would probably be, something around 20 to 40, or 20 to 60, depending on like what the strike price is, right, and when we execute. But the total usage of the treasury, if it were without the warrants, that'd be around 15% of the treasury. Once the warrants come into play, we're seeing around, a 21% utilization, which is a much lower utilization than the original proposal, which was around 60 million, and I think that was around 45% utilization, which I think was like too aggressive.
Yeah,
so
love that. And are community members going to be able to actually purchase warrants?
So this is, and this is something, I prefaced with, which is we have to discuss the conditions and kind of execution, right? Once we've kind of like generally achieved consensus on these like terms, then it comes down to like the execution and like how people can access these warrants. I do think the warrants might actually have to be, just be like an on-chain contract. Probably even like not composable, because like the point of a warrant is for it to be like, is for it to not be able, not easily tradable like on the open market. That's the explicit difference between, I guess, a warrant and option, right? Options are, traded on exchanges, etc., have enough liquidity. Originally, when we use that terminology option, I think there's lots of misunderstandings around it, because even if we did issue a sushi option right now, there's not established option markets for sushi, right? There's no one doing like continuous Black-Scholes pricing, right? And even if we were to set up a liquidity pool for it, liquidity would be so thin that like you would incur like pretty, severe price impact if you're trying to buy significant amounts of these options. So effectively, like we called it, an option, right? And there's all these discussions regarding like, oh, if there's a premium attached to option, then entities can immediately sell in the open market to like realize a discount. But from our perspective, that's technically not true because there's nowhere they could sell it to, right? And there's no like range of options that are being actively priced and repriced, right? On the market right now. So effectively, this option it essentially becomes a warrant, right? So and that's basically I hope that answers your question. I don't want to.
It does. And was
I
there
don't
actually
wanna
was there also a lockup period? I seem to remember reading about this. Was like a 1 year lockup, and was there a vest after this associated with the institutional funds at all?
Yeah. So for the institutions, it would be a 1 year lock and then 3 year vest. Um, to be honest with you, a lot of the institutions have signaled that they don't prefer even longer, right? But then it just becomes like what the exact terms of the lockup will come down to. But for now, it's like 1 year vest and 1 year lock and 3 year vest. And for the community portion, we're thinking that there's no lock
Yeah.
because that logistically becomes a little difficult. And as we said, equality of access is one of the key objectives, right, of this like revised proposal because we want the community to be able to get like the same deal. And we'll have to definitely discuss like the conditions, right? Because like there's definitely like edge cases that we'll have to like solve for, and then like legal aspects, et cetera, right? But regardless, like we're committed to equality of access and making sure community gets the same deal, if not a better deal, right? So that's why we've said, in terms of lockup, like that's logistically a little like unnecessary, right? So and it'd be preferential for the community, right, to not receive a lockup on those tokens. And we believe most community members are like long-term holders, so why not? In terms of as I said about the warrants, it might actually be an on-chain contract, probably not even composable to prevent like too liquid movements of contracts between different parties that we wouldn't even like recognize, right? So that's generally the structure right now.
Thank
The
you, Omakase.
structure,
That's very helpful.
yeah, no
Just
problem.
one
Yeah.
couple last comments. I wouldn't mind seeing a longer lockup on the institutions just to make sure we bring the right people in, and then also the pricing of these warrants I think is going to be important as well. But otherwise, you answered my questions. Just wanted to voice those two things. Thank you
So
guys very much.
For the warrants, there will be as of now, it is a 2 year. It is a 2 year expiry. It'll most likely be kind of like a European style warrant / option where you can't exercise until the end of the 2 years, and then within a limited time frame. And then when you exercise, there might be also a 2 year vesting, right, for the exercised option or warrant. So that's generally the terms. I think there's lots of talks regarding pricing the warrants. I think generally, and this is most likely going to be an unpopular thought, right? And we continuously welcome like community feedback or any like experts in our community who can help us price this warrant. Generally, my personal feeling is that the whole point of the warrant is that we expect institutions to just like hold on to those, and like there shouldn't be any like there shouldn't be any like fluid trading of these like instruments. And so the purpose of the warrant is that, hey, we're going to sell some, like the fundamental purpose is we're going to sell some sushi today, and when sushi hits like a certain price, like a certain target price, like in the future that we expect is like reasonable, we think we would also like sell more sushi at that point, right? And it should be to like the current partners, etc., right? So you brought up the question, right? Like, are we do we expect to like raise in the future? And that's kind of like us like pushing a forward price, right, on sushi and saying, if sushi did hit this price, this is like how much we're looking to like offload, right? Either for hedging purposes or like runway purposes, etc. So that's the fundamentals of like why we're using kind of this warrant option kind of structure. I hesitate to even call it a warrant now because we don't want it's just an agreement to say, hey, at a certain price point, like we're probably going to like offload this much to all involved parties. Now it does come down to, people say, okay, the warrants should have, a price attached to it, right? And I think, if there are any experts, right, within our community who can like, price these warrants in a way that everybody kind of fundamentally agrees, then, completely welcome that. But from my perspective, it's really like, if you assign a price to these warrants and, institutions can't easily or institutions or any players can't easily execute these warrants to realize the discount that's within the price, and they're just going to hold it and then like exercise it if it hits the strike price and not, then there's really no like. It seems kind of to be, and people definitely might disagree. It seems kind of to be like a waste of time to try to find a price for these warrants that will never be, sold, right? So in my personal view, I feel it's like these warrants are just an agreement to buy at a future date. We can assign a price to it. That price will probably be messy, and as I said, looking for expertise, right, in this audience in our community to help like give this price more precision. And the price is somewhat meaningless, right, if the institutions or any involved parties, right, do not actually sell the warrant, right, or they don't trade the warrant for something else, etc. Right. So how I view it is it's just an agreement to buy at a future price. It keeps all parties aligned, right? Because it's like it also signals to everyone that like, hey, we do expect Sushi to like reach this price, right? And like this is a goal that everybody should be working towards. And institutions, they want more exposure to Sushi. Right now, like we as a community have kind of decided that we don't actually want to open our exposure to like 45% of the treasury, right? We want to keep it something like reduced, like 20% at most with the warrants. And institutions are always like if they show conviction with Sushi, they want larger and larger positions, right? So this warrant is basically saying, okay, you'll have the option to like have a slightly larger position in the future at this price, and we feel this price is like around the price that we would, do another, smaller raise, etc., for hedging purposes or even for, like run rate purposes. But generally, that's the structure. Welcome any more thoughts from the audience regarding like pricing the warrants. If you think warrants, if you have any questions between warrants and options, and etc.
Awesome. Thank you, Omakase.
Yeah, I mean, I actually have some thoughts about the.
Sure.
I mean, I've talked about this before with some people, but I think the whole warrant discussion is like a little bit of like a red herring. Like it's not. I don't think it's even relevant to like the actual offering. Like as long as it's like I think the important thing to convey is it's a non-transferable call option. Like that is sort of I think what is trying to be conveyed when we're talking about warrants. But I'm also a little bit not sure on that point of like why we're differentiating between a call option and a warrant just because there's no liquid market for it. Yeah.
I think it comes down to is it functionally an option, and also like what's the intent, right, with this option. So as many numerous posts have pointed out that options on a liquid market have an implicit price. So this option is valued at X dollars, right? And this option gives you the right at a certain date to use USDC to buy like sushi, right? When sushi is this price. So since it has an implicit price, a lot of posts, on Twitter and stuff have been saying, depending on how you price the option, anyone holding this option or given this option freely, can realize an immediate discount, right? And yes, that is true, but there are definitely some nuances to that. There needs to be a liquid market, right? Or else who are you going to sell it to, right? You can't realize a discount if you can't even sell the option, right? And B, like how you price the option matters. And because there's not like an entire liquid market of options for sushi, right? Like the pricing is all over the place in these posts, right? Probably some of them are too aggressive. Some of them are using like, and as I said, for the warrants, right? The pricing, I welcome anybody, right, to like, come up with, kind of a comprehensive model of this. But I do think like traditional like options pricing, Black-Scholes, etc., like they don't really come into play, right? Because there's all sorts of like caveats, right? There's token emissions that come into effect, changes in token emissions that does that suddenly change like the options pricing, right? Volume, like volatility, etc. Like all these things come together. So the intent, I guess, for when we originally proposed the option was that it should be non-transferable and there should be no market for it. So you can't, so institutions can't, or institutions or even any involved party can't realize a discount, right? So that's the key point, right? We don't want anyone to realize a discount, right? All we want is for people to, you know, enter into like a forward agreement saying that sushi, when we're at $16, or $20, or $25 or $30, we'd like to sell like this much, right? Because we do think like when we're at this point, we need to sell something in order to hedge and also to like increase our satisfy our run rate, right? At a certain price point. So that's generally what I think the option versus warrant definitions come from. It's really, I think these definitions are also probably probably have some flaws to them, but the intent, if we want to talk about objectives, is pretty clear, right? We want to sell sushi at kind of like a future price, right? And we don't want any involved party to realize a discount, right? So the only way to prevent them from realizing a discount is that you prevent them from onboarding, etc., right? Like offloading into a liquid market, etc., right?
Gunpachi, hello.
Yo, I thought to drop by. I didn't mean to be rude or anything, but my brain always thinks in price discovery, and I had to ask the question.
Mhm.
Auctions, why we? Because I feel like a lot of the pricing with the TWAP and everything with the pricing US dollars has caused a lot of volatility and games and whatnot. Wouldn't it be better to kind of price it like in terms of 1 million sushi and then do an auction and let the market decide the price?
You mean 1 million sushi, or you mean the warrants portion, or just the sushi portion,
Just
or
the 1
both?
million sushi.
I suppose we could. There are some caveats. The first caveat being that some more traditional institutions would not be able to participate in. They're like not set up for an auction style. They some institutions that we've spoken to, like they can't even market buy, right? They're not set up for it. So I think that would exclude some parties from participating in the auction. And then I guess on another level, right, like, right, I think if there was an auction, like, let me be the devil's advocate, why wouldn't people just like buy at spot, right, on the open market? And the auction would probably account for, any, like, theoretically, the auction would probably account for any like slippage incurred, etc., for that size of the trade. I don't know. Open to your thoughts.
Yeah, so the way I see it is that you're going to have two sales anyway. One's going to be a public sale, one's going to be like a whitelisted, offer, OTC offer. And so hypothetically, if both were auctions, the whitelisted one would obviously sell at a bit of a discount anyway, because it doesn't get the full price discovery as the open market would. So there is an incentive to be part of the whitelisted strategic invited like group. That's cool. And then the idea would be to have multiple auctions in the next 3 to 6 months. And so the incentive, instead of issuing warrants and again doing the price discovery, what is the good price for a warrant, just have another auction in 3 to 6 months or another sale. I'm not sure why it has to be decided today. And if we had to decide it today, I'm not sure how you could pick the right number.
Right. And what would you, I guess, what kind of auctions would these be?
I love Dutch auctions, obviously, but anything that just has some sort of price discovery where you set the price high and over the course of a week you would work out what the fair price is. And if a particular VC priced it differently than a different VC, obviously they would get a pro rata more amount of tokens than the other. So still sell the 1 million sushi, and if it goes for $10 or $8 or whatever the price is, then the VCs get a pro rata amount.
Would it be possible in this auction schema to where everybody prices it below the current value? It would be possible.
You have
right?
a minimum price that you're happy with, because we've
minimum,
talked
okay.
about discounts and whatnot. But the idea is that, you know, you have some VCs who value sushi more than others, and it will naturally find a price above the minimum. It then depends on the markets and the VCs and how they price it, what that final price is. But you avoid this TWAP pricing that has caused all the volatility and uncertainty in the last couple of weeks.
Yeah, this is definitely interesting. I think this is definitely something I think that can be discussed. Yeah, in an execution phase. My only concern, and this is like probably an annoyance, right, for most people, is that some institutions might not be able to use our auction system for whatever reasons, right? If some can't even, market buy tokens, that is kind of a limiting factor. But definitely nothing that we can't, probably get around for sure.
Something that just came to mind while Gapanchi was talking about the auctions is something we could do as a format is if we are doing a community offer, then we could just do the auction for the community portion, and then whatever that deal ends at, we just have the same offer to the strategic partners.
Oh, very interesting.
And we also had some more people raising their hands. Klinko. Yeah. Thank you, Willie Loman, as well. If you have any more questions, feel free to raise your hand. Oh, did I kick somebody? Oh, no, I think Gompachi was just leaving.
Klinko,
Yeah, I just wanted to discuss the warrants versus the options and some of the liquidity decisions, because this is kind of what I do in my day-to-day professional life. And as it relates to the warrants versus options discussion, I think that's part technicality. They're very much the same. It's just nomenclature, and they're structured and valued very similarly. And as it relates to the liquidity of the two, whether you lock up an investor for those warrants or not, I mean, they could, in theory, synthetically create the offsetting contract in any other market. So, in Arca's case, not that they would intend to, or I believe they would, but they could go out and sell 2-year tenor call options and realize a $3, $4, $5 premium pretty easily in the open market. Whether they could do that for a $5, $10, $15 million total notional value, that's to be determined and probably doubtful. But the point being is, no matter how the deal is structured, there are liquidity options for the counterparty no matter what. So I don't think that's as big a deal. It's more a decision point on how much value you'd want to give up to these investors. A theoretical value on these warrants is probably anywhere between 250 and 5.
Just are you, Klinko? I don't know if you finished there or if your mic cut out.
A question of the intents of the parties, but
I think we lost you for a little bit. You'd said $2 to $5 or something like this, and that's where we lost you.
Okay. Yep. So the value of the warrants is between about $2 to $5.50, depending on what your inputs on volatility are. It's valued very similar to a standard option, other than the kind of dilution and liquidity parameters, but those are very minor. So it's a real question of how many of these warrants would you want to give to a potential counterparty, because again, they could, although they wouldn't be able to sell these specific structures, they could synthetically create something similar and sell it to the market, and create their own liquidity no matter what. Again, not that they would intend to, but that's just one other consideration. Whether you lock them up in liquidity or not, they could, in theory, create that liquidity themselves.
So another just kind of thought here as we're talking about this, because it seems like this is a hot topic here, that people are concerned that VCs are just looking to, capitalize on this and immediately create some sort of, market for this. Could we just somehow implement some sort of penalization? Like if it was discovered that any VC that participated in this goes out and does some sort of backdoor deal, such as we've just described here, that it would affect their, the vesting part of this or something to that nature. Is that a possibility or an interest? Like, to me, I don't see these kind of companies, these partners doing that. I mean, especially someone like Arca that's got, they've just disclosed with us yesterday, they've got 50 million in Sushi already. And then they're not even going to get close to, what they're going to be getting in a raise here is kind of, quite a bit smaller than what they currently have. I just don't know what, I think they're more interested in seeing this thing go up versus trying to squeeze out a little extra juice on this deal and hope that nobody catches on and sees them as nefarious. That's just from a quick standpoint here, but just thoughts around that.
I will say, however, that like we in our AMA session 2 days ago, it's all about incentive mechanism design. It's okay to assume everybody's self-interested, right? And this is why we're in DeFi, right? We're creating, incentive mechanisms all the time, right? Because we're assuming that people are, self-interested, and they're also economically, prudent, right? So I don't think it's, I actually don't think it's a negative to consider hey, these edge cases, what if they did something, how do we design something that kind of prevents actors from even thinking or acting about this way. I think that's all fair game, right? And that's definitely what we're here to do. But not sure if Klinko had any more thoughts regarding.
No,
I know you. Yeah.
Yeah, I typically agree. I mean, out of any firm there is that I've seen, I believe Arca to have the best intentions in everything they've done. Publicly, privately, they're a great stakeholder in this. So it wasn't anything against them. And like you said, it'd be tough to probably set restrictions on there and try to then have a community decision to determine what Arca may or may not have done in the future against creating liquidity. I think that'd be too tough to determine. But I guess last point, and then I'll hop off, is the warrants type of discussion is just another thing we should consider as a community going forward, because these are things where we could issue these, sell them for, using the same kind of valuation as an example, anywhere from $2.50 to $5.50 for this, $16 strike 2 years from now. as a capital raise, just as another funding type of mechanism. So there is value to them, the warrants, and then that's part of why ARC as an investment firm wants them with them. So it's not an unusual part of the deal as a fundraising mechanism. So I'll hop off here, but I just wanted to bring that valuation there, because it's tough to try to quantify what the warrants are worth. And again, it's you can make an argument anywhere from that $2.50 to $5.50 just based on an option model, but it is a consideration to raise money in the future as a mechanism without just purely selling sushi itself.
Awesome. Thank you very much, Klinko. And feel free to reach out to us in the future here. And
I actually,
perhaps be a part
sorry,
of
I
the
wanted to.
council.
I mean, I don't want to interrupt you, Tangle, if you've got something to say, but I actually wanted to ask Klinka a question about sort of those numbers. Because with the warrant or the warrant that was being discussed, I think it's being discussed as being a European style, which means that basically you can only exercise it at the end of the term, and you have like some period of time. I believe somebody can correct me if I'm wrong on that. Would that would that impact your sort of valuation? Because I think you're just using standard options, out of the box equation for that. But since they can only be exercised at a certain point, that would seem like there would be a heavier discount to that premium, right?
So the main difference between European style and American style options that you're mentioning is exactly as you said. It's you exercise it after that 2-year time period. Typically, the only difference in valuation comes into play, thinking back in a traditional equity market, is when an underlying pays dividends. So you kind of think that in terms of sushi versus X sushi and some of those kind of interest and dividend bearing instruments. But from a liquidity standpoint, that doesn't really factor into the valuation. And mainly why that exists in the equity world is because the company will pay, say a $10 company, they'll pay a $1 dividend. And then upon that payment of the dividend, they get revalued down $1 from 10 to 9, the next trading day. And so that European versus American style comes into play in terms of exercising and some of those incentives there. But from that liquidity standpoint, because and the reason why I would say it does not deserve a discount purely based on that is because a contract could be written to create a similar type of structure out in the open market to create a 2-year call option, same strike, same incentives and everything, and it would have that same kind of structure. So the European style of it only means that the holder of it will not be able to exercise into the underlying for those 2 years, but the European style option in a traditional sense does not mean that you cannot trade that option up that term. And again, even if they were locked up, sure, they may not be able to liquidate those exact contracts, but it's not to say that they cannot synthetically create a like contract in their own markets if the liquidity were to be there.
Mm-hmm. Yeah. I'm following you. Okay. Well, thank you. Yeah, thank you for your thoughts and perspective, Klinko. That was very, very insightful, in my opinion.
Yeah. Thank you, guys.
Yeah, much appreciated.
Yeah, and please, stay in touch with us and reach out as we, work on these structures and everything. Every bit of input sure helps. So thank you.
Yep. Thanks again, guys.
Also, while we've got a pause here, I just want to talk about the popes because I'm sure there's a few people wondering about that. All the bots are kind of broken at this point, so I'm just running a broken bot to give me everyone's user ID. So that's where I'm able to collect everyone's user ID through this. And we'll be setting up the manual pope retrieval system, very similar to the Sushi Day Pope that we had, our International Sushi Day. So if you had one of those, it'll be similar kind of situation where you'll have to go to the site and enter in your user ID to get that Pope. So we're hoping to get that set up over the weekend, but please tell your friends that's what's up, and just keep an eye out on announcements, and we'll keep you posted on that. But that's the structure, so there won't be any Pope delivery as of this session, so don't get too concerned. But in the future, over the weekend here, hopefully we will set it up so that you can have manual retrieval for, hopefully, I think there's all 5 Popes this week should be available on there. So thanks.
Yeah,
All
people are really killing each other for these popes.
It's quite a deal. One other thing I wanted to mention too is from Adam. I asked Adam Cochran to come on here today. He wasn't able to today, but he'd also put out a tweet. I think he put up something on Twitter here, kind of answering a few questions about smog and whatnot. So maybe we'll put out a tweet, or we'll retweet about that as well. But if anybody has questions around that for Adam, looks like he's created a video or something, I think. I haven't had a chance to look at it yet, but
We have also got some questions from the text questions from Kai Morph. They ask, and all the money raised, what is it for, and what are the accountability measures? And another question from HHK about how to make sure that VCs don't participate in the community sale.
Great. I think regarding the amount raised and the accountability, I would say right now we have basically an internal run rate, right, that we calculate, right? We currently have around 22 core team members, and we're looking to grow that eventually, right, to like something around the 40 number, right? And this is a host of, different, product, marketing, business development, and also technical, both engineers and, infrastructure and DevOps. So some of these numbers are basically also based around our infrastructure needs, because as I've mentioned in different proposals, like that need is definitely growing. It's definitely a pain point for us because we're a large exchange. Our users should have 99% guaranteed uptime, and as we move to other change, this will continue to be a pain point, right? Because those other change probably don't even have their own, infrastructure set up to our, I guess, requirements. So all these are factored in, including like some of the spending amounts for like current marketing, etc. That gives us, like as we said, we think for this proposal, this will probably be the last treasury related proposal for quite some time, because this 20 million with 20 million with future kind of warrants for around $40 million total raise, right, with only 20% of the treasury. This satisfies our run rate for roughly, we would estimate like 10 to 15 year horizon. So this is generally like how we've arrived at this estimate. Of course, like these numbers change as for example, when hiring Solidity developers, right, these numbers fluctuate depending on like if we feel someone is like a key strategic value added and like a key hire, right? So but generally that's like what has determined these internal models. And I think also more importantly, it's about as I've mentioned, right, many times, that the strategic raise shouldn't even be called a raise. It should be called a strategic diversification, because yes, we have a run rate, but that runway is the runway is quite long, right? So for the current objective is really to diversify some of our sushi holdings into stables, right? And this is in line with kind of other like proposals that have come out in order to diversify and even hedge, our treasury. As I've said many times, like we're not approaching this proposal in terms of like price timing, and this is why the warrants come in too, right? Because we can effectively say like, oh, when sushi is X price, like we feel like we should offload some amount as well. But we're really approaching this from like two strategic objectives, right? Which is um, um, A, we have to acquire strategic partners because we're on like this next growth velocity where we kind of need expertise and kind of need to penetrate the network effects of institutional level players. And then B, like we also just need to diversify some of our treasury to you have USDC, and as many previous AMAs have pointed out, USDC can be used as a tool, right? It's a sword and a shield, right? If we believe sushi is undervalued, right, we will continue to use USDC to like continuously purchase more sushi, right? We can use USDC to kind of hedge against any like downturns, and obviously another key strategic partner we're looking for are people with very strong understandings of capital markets who can like help us manage that portion of the treasury. Because as I said, I'm an engineer, right? I'm not a trader, etc. I'm not qualified to make those decisions. So we're looking for people who have lots of experience in managing those sorts of things to also onboard as a strategic partner. There's lots of institutions that are, I would even say like ARCA has, long track record of understanding capital markets and etc. And so like those kinds of partners and advising us on how to kind of manage the USDC portion of the treasury would be definitely a value added. And we kind of see this as just parts of just the natural progression of becoming a more sophisticated organization, right? And as I've said before, DeFi is a very new space, 1 year at most. Most of these treasuries are just sitting exclusively on the native token, and it would be prudent for them to kind of diversify and like manage the treasuries in a more sophisticated fashion. So those are basically the two key objectives of what we hope to accomplish, right? Diversify and onboard strategic partners, and we also have a run rate that can be satisfied, but that run rate that run rate right now is like so long that most of the intention is really just to diversify, right, and make sure that we can hedge against any market fluctuations that we're not qualified to predict will happen tomorrow or will happen yesterday or will happen next week, right? So that's generally the use cases for and the reason for this like diversification.
Awesome.
Is it possible we can hire Brutal Trade off Twitter to manage our treasury?
Oh, Brutal Trade is also on Core. Yeah.
Oh, he is actually okay. Yeah, that's
Yeah,
awesome.
yeah. Right.
Perfect. I just want to touch on Adam's video there too. Yeah, this video has like 40 minutes long, and it's got all of the questions are broken down in like the timestamp in a YouTube video. So very intricate.
Awesome.
I'm looking forward to going through this and see what's all happening there. But anyways, just wanted to give a shout out to Adam. So thank you. We've got another question here, which maybe this is about an hour now, maybe a couple more questions, and then we can look at finishing up here. Who we got? Somebody on stage here. Great.
Yeah, sent Great Mood an invite. Yeah, there they go.
Nice.
Can you hear me?
You bet.
Yep, you sound good.
I don't know. I don't know if you guys touched on it because I came here a little after, but I was just wondering why we're doing a community raise. If technically, us as a community, we're not going to add more value than we're already adding. Wouldn't it be just better to just save that half for any future strategic partnerships as token holders? I don't know if this was already answered, but
I actually think this is a pretty good question. Why we decided to include the community raise portion was because there was lots of concerns regarding the equality of access. I guess there was some opinions from the community that they wanted to access the same terms that institutions had, or else it would seem like we we're preferencing institutions. I think this is a discussion to be had, right? Like, if the community thinks that a community raise is, not necessary or not strategic enough to satisfy these like two objectives that we've set out, then that's definitely a discussion to be had. I think there are some other implications as well, right? That we'll need to have discussions about like next week, right? Including like legal and also like implementation. Oh, I just realized the previous question that I missed answering was how do we prevent institutions from entering into kind of the community raise? Just to kind of sync up on that really quickly, because I just remembered I forgot to answer that question. On that note, I think now there has been some discussion regarding like, okay, we take a snapshot of all existing addresses, and then we have a whitelist, and then this whitelist can participate on MISO, can participate, directly, etc. And then this whitelist can be, I guess the community can kind of determine what they feel the fair parameters of this whitelist should be. So, welcome people to say like, I think at minimum, the wallet should have, one sushi, and at maximum it can only have like 100 sushi, right? Of course, these ranges change, right? And there will be, some discussion on like, even people with, hundreds of thousands of, sushi, it's technically part of the community, right? They're just a different like class, right? They're a different like size holder, right? So looking forward to like kind of those implementation details. But generally, I think Great Mood, you bring up, a valid point, that I hope the community can consider, over this weekend, is whether or not like, having a community portion is strategic, right? And if it's a value added, and, if this is something the community wants to do, and, as I said, there's lots of implications of the community raise. There's still some outstanding questions regarding like legal and etc.
Yeah,
Yeah.
sorry, I was just to add on because technically part of the requirements of this raise is asking the VCs for them to tell us why they're a strategic partner. So if as a community, I'm a community member, I'm obviously not a VC or anything. If I wanted the same terms, I would have to convince the community as to why I should deserve this. What am I going to add? Like, what value am I going to add? Which, if it's going to be the same in like pricing terms, it should be the same as like value add terms. The community, like convincing everyone else what they have to add. Just, I don't know. I guess it's the same term.
That's a good point. I'd kind of thought about that as well. Great Mood, where you are suggesting that like obviously the firms have potential strategic aids that can help us. Whereas as just a regular community member, like even myself, I thought about that where hey, like what can I like? There's a certain things that I can do and that I try and do within this community, but it doesn't have the same reach as what these kind of strategic partners would have. And that does open it up to saying, hey, can we give that kind of same value? So I think there's a question there as well. And when it does come down, as Omakasi has mentioned, like kind of fairness to everyone and making it accessible, I think that kind of goes to speak about that. But there's definitely some conversation around that.
Yep.
So thank you.
Thanks for clearing it up. Yeah.
Zappuccini.
Yeah, I like where you guys are going with that half and half for the VCs and half for us in the community. I was thinking that as far as law and regulations go, that is definitely a good reason to pursue a deal with people. But like my concern, and I guess you did just kind of touch upon it, is really how you determine what wallets get whitelisted, right, for the community, as far as people sharding into multiple wallets and using that as an opportunity. I'm not quite sure exactly, right?
It could be a snapshot of addresses, like let's say 1 week ago, right? The beginning of all this strategic raise discussions. So that would prevent any actions now, because you could shard, but you wouldn't be included in that snapshot, so it wouldn't be captured. But as I said, there's lots of implementation details regarding the community raise, and what parameters, right, people want to set that they think is like fair. And whales are part of the community too, right? And I guess one requirement that we would have for existing institutions that participate in the institution round is that they will be restricted and they're not allowed to participate in the community route, right? We can have agreements, right? But anybody can create a wallet, right? So it just comes all down to like mechanism design, as I've mentioned multiple times. So looking forward to discussing, what kind of design we all feel is the best to kind of manage this community raise, and as the previous person who asked the question, right? Like, should there even be a community raise, and if we do have a community raise, like should the community have to be subject to the same requirements, right? Do they need to pitch, right? What value added, right? That they feel that they add to this entire community, organization, ecosystem, etc. So really interesting discussion topics there.
Right. I'm really looking forward to get in with everybody. And I'm looking forward to the discussion about whitelisting and all that down the line. Thank you, guys.
Yeah, thank you, man. I think we have one last person asking a question. Chasing Dreams, Vamos. I think they've been in the forums as well. Be good to give them opportunity to ask a question, and then probably look to start wrapping up. Hey, what's up, man?
I don't think your mic's working. Something's up with your mic. Looks like you're trying to speak, but we cannot hear you. Chasing Dreams. We can't hear you. Maybe try something different with your mic. Might be some mic settings.
Somebody asked a question in text. Did you say Sushi is interested in onboarding traders to manage a portion of treasury funds? Yeah, I'm not sure, Omakase.
I think any kind of institutional backers that we'll try to work with, if they have treasury management experience or capital markets experience, that'd be definitely a plus, right? And as I kind of said, right, like in the whole strategic evaluation, right, like what are we looking for from partners? I think strategic value comes in all different kind of shapes and sizes, right? I would even say, like yesterday in the kind of discussion between Lightspeed and Arca, like these are two similar but also like very different types of entities, right? And so it's great to get that diversification in partners, right? And so in terms of like specific traders, I guess like I would say that if they want to onboard as like institutional partners, I think that's probably more value added. But then we can also think about like mechanisms to we can think about mechanisms of like evaluation, right? For like there's a certain portion of the treasury and we'd like some specific teams to like manage, etc. Generally, right, as I think as we start off, crawl, walk, run, right? This crawl phase, it's let's work with the institutional partners that have a lot of this experience, can give advisory, right, on how we should be utilizing our USDC, etc. And then let's start to think about like how we can optimize that through like different teams, etc. But definitely a valid question and proposition. Did Chasing Dreams Vamos drop?
Yeah, I think they must have just been having issues.
I sent them a message as well just to say their mic wasn't working, but haven't got a response. So,
yeah, I think this is a good place to wrap up for this week. Amakse, if you have any closing thoughts that you want to give, feel free.
Sure. I think it's definitely been a long week, highly engaging week. And there's been we've had numerous people come up here. We've had a lot of engagement with the community. It's been quite frankly amazing. I think moving towards next week. So over the weekend we're going to take a break. So we won't be having these AMAs over the weekend. But we will release a schedule sometime this weekend regarding next week and some like further discussions we want to have in order to fine tune the proposals or like consider, I guess, any new variations of proposals that kind of fit within this framework. Um, and additionally, right, once these kind of terms are finalized and there's kind of some consensus around them, then the next phase will be discussions regarding execution. So as I said, if there is a community portion, like what are the parameters that will apply to this like community round, um, and some other additional items for consideration would be then which strategic partners are on the final list, etc. And then once those are complete, we should be able to have kind of like a finalized proposition that we can put to snapshot for a vote. As I said, this whole process has been about, accessibility, transparency, and visibility, right? And we want, community members to engage. I think, there were some great questions today. I think, Klinko came up here, like explained, what he thought, a fair model for pricing the warrants were, and he went into the details of that. I think that's awesome. Looking forward for the community to continue to like step up and voice their opinion and voice any feedback and any alterations that they think are appropriate. Everybody in the audience has their own skill set, and we're all here to work together towards some kind of resolution, whatever that may be, and optimize along the way. So really appreciate everyone for like coming out this week. We have these every day. We're going to get started on Monday and we'll release the schedule for that. There are some like key discussion topics that I think we can definitely cover regarding like this whole community raise and like the implementation details regarding that. Also regarding like the general structure that was proposed, and kind of the execution mechanism, right? So Gompachi also came up today and suggested, right, we could possibly use miso, and there's some discussions that we need to have with the community and also like institutional partners as to if they can even participate in such a mechanism. So all those discussions next week. I think it's been super highly engaging this week. We've revised the proposal. We've gone through a series of revisions that I think everybody here would agree is headed generally towards the right direction. Advancing from the original proposal, and we've heard from lots of potential strategic partners. We've heard from Amy from Lightspeed, Jeff and Alex from Arca yesterday, and they put on a very strong showing of like how engaged and committed they are to like this whole governance process, right? So this whole week has been about refining, this list of strategic partners, refining this list of like, terms that we as a community kind of want to see. And next week will be more about like precision and applying, any execution specifics. Once that's done, I think we'll be in a pretty good place to put this up for a formal vote, if there are no like serious objections, and then it'll come down to voting with your X Sushi or Sushi ETH, right? So putting this governance token to use, and seeing where the line falls, and wherever the line falls, right? We're a community, right? This whole process about discussion and alignment and consensus, right? So really appreciate everyone for coming out this week. It's been great, and hope everyone has a restful weekend.
Awesome. Thank you very much, Omakase, as well, for all your input this week. And yeah, Turtle as well. Thank you for showing up and being a part of this all week. It's been a heavy week. It's been awesome. Really, really cool.
Yeah, we've had some great guests come out. We need to make a SushiCon be like every single week.
Sushi. That's been great. I liked how you coined that, SushiCon. That's been great. That's been super
SushiCon,
good.
exactly.
Yeah, the faster we trademark that, the faster it makes Uni look like they're forking us when they do Unicon.
Right on.
Anyways, it's been great being out here this week. Thank you everybody for coming out and engaging. Keep your eye out on the forums and on Twitter for announcements about the upcoming week and everything that's happening then. But yeah, this has been a great day. Take it easy, guys. Stay safe.
Thanks a lot, everyone.